Well, break out the tourniquets because it's been an absolute bloodbath this week. I hope you're doing all right. I hope you're holding strong. But I know after a week like this, it is hard to be positive. So let's go do a quality check in on our portfolios and see how we got treated this week on Friday after the bell. Greetings, and salutations to all my traders out there in the world. Thank you, brothers and sisters, for tuning in. I hope that you survived the week. I hope your portfolio didn't take too much damage because it was a rough week. And if you're in a tech heavy kind of portfolio, my, what a brutal week. But after you have so long of SanDisk and Micron and all these other big names just going parabolic face ripping to the upside, you're going to get a little bit of pullback. And when you get that pullback, what happens? You get the others in the same sector that kind of get all nervous, and then they start selling off their stuff, and it creates this chain reaction of just butt kicking for the whole week. I know my portfolio has been hemorrhaging red. It's been awful this week, but that's okay. It's expected. It's part of the trading world. It's frustrating, it's irritating, it's all of those things, but it's just part of it. You just got to learn to deal with it. I know my portfolio, all my puts are just getting struck. They're getting in the money, they're getting hammered. But you know what? That's why we put them for a longer date. If we have a longer date on them, they're getting struck now. I think that's a good sign, because get struck now before the end. Get struck now, get yourself a chance to bounce back up. Same with the Rigetti puts. They are underwater, but not that much underwater, maybe a couple bucks. And that's okay, because even if we get in, doesn't move from here, and it's only a couple dollars in the money, we could easily turn right around and start our wheel strategy on it, or covered strangles, or as I like to run those Jade Dragons. I mean, they turn around quick. Boom, you get your profit. You get a 50, 40, 60% profit on those in a really short period of time. But we just got to have to do some portfolio health. We have to see what's going on. If you haven't been keeping your buying power, at that 20, 30%, if you've been, flirting with disaster because the premium's high or in good shape, that's okay. I understand. But you may have just absolutely got struck and went negative buying power this week. You're probably seeing, if you're in a tech heavy, or if your beta weighted delta's around 100, you're losing 10, 15, 20% of your portfolio in some days. It's a rough experience. And it does teach you a great set of defensive skills. And sometimes there's just nothing you can do. Sometimes the stock's winning and you just kind of got to eat it. You figure out if there's anything I can do defensively. And if not, you just got to figure out, what else can I do? Can I now start selling the opposite inverse operation? I mean, if your puts are getting struck, maybe I could sell a call spread. So just don't get panicked. Just analyze what's going on, assess the damage, and see what's going on. And if you like the stock, say Rocket Labs. I like Rocket Labs. I've been playing Rocket Labs, and I've had this one poor lonely put on for a long time, which is now just getting its hind end kicked. But still, I like Rocket Labs. And if I like Rocket Labs at 110, 120, then surely I should like it at 80, 90, even better. That makes sense, right? Because if your stock, if you've really been paying attention to it, you really believe in it, and it has a huge drawdown, that gives you a huge opportunity to get into it. And it's an opportunity. Whenever you see the red like this and going crazy, it is an opportunity. You want to kind of wait and see what's going to happen. And I'm not saying time the bottom, but wait till you kind of see a bottom is kind of forming. Is it getting at an old time low somewhere, from 6 months past? Look at your chart. See if it's reaching down there to where, hey, it's probably not going to dip much lower than this. Or if it's been going down for a long time, it might just be due for a pullback. But just, again, assess the situation on the stock that you're looking at. Try to figure out what it's going to do. How far has it been falling? Is there a base? Is there a bottom? Is there a line in the sand where it'll probably bounce off of? And when you see that bounce, boom, now it's time to get back into your puts. With our puts, with Serve Robotics, with SoundHound, Joby Aviation, Archer Aviation, we've been running puts on those. They've been dirt cheap stocks. They've been beat down, kicked around, I thought, until this week. And now they're really beat down and kicked around. And you have a chance to maybe some of your puts, if you were doing things like that also, are now in the money. It's not time to fret or anything just because in the money. You're not running a put campaign. You're running a campaign on the puts until they're no longer puts, until they become stock. And then you're running a campaign on the call side. So it's nothing to get worried about. Yeah, if you didn't balance your portfolio right, yeah, if your buying power is a little bit off, you got caught, hey, you got caught, it's okay. But I know if one lesson is, if you can't really afford to own the stock, you probably shouldn't be running puts in it. Like, let's take a $100 stock. Well, if you don't have $10,000 to invest into buying that stock, just outright, maybe that's not the stock for you. Because if you get into $100 stock and you put a put on it naked and it goes below that put, man, that buying power is really going to start peeling off. It's really going to start taking money from you, the brokerage, to ensure that you have enough money to cover what's going on. I understand that. I mean, they're in business to make money. They're not a charity organization. But you have to understand, if you're running naked puts on $100 stock, $200 stock, and you don't have a 50, 75, $100,000 account, at least I say personally over $100,000 account for $100 stock, you're running a risk of getting into some serious trouble. And especially if you're doing it in multiple names or multiple legs, you could really get hammered quick. I mean, your portfolio could drop 20, 30% in a day easily. And if you don't have the buying power at 50%, then you're in a whole lot of trouble. But that's okay. These red weeks are just part of the learning experience. They're part of what we grow. Yeah, it sucks. I mean, I hate to lose. I hate to lose money. I hate to be in trouble. I hate to be under whatever the case. I hate it all. If I'm not winning, I'm not happy. That's all right. It's all part of the dance that you have to do. And when we look at the Qs this week, I mean, they're down. I mean, it could be 5% by the end of the day. SPY down. IWM down, 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 down. It's the theme of the whole week. I mean, everything that we're going to talk about today is down. If you're in crypto, you are singing a huge down tune, because it has been taking a beating since last October. Last October, you started going down. You had these big down moves. You okay? Hey, how about a V bottom? How about some love? How about a tick up? And now it's just getting hammered even more. And also, if you're in things like ETFs like IBIT, you're just in trouble. Any kind of crypto space, anything is getting hammered right now, and it's rough. It's a tough time, but don't let it get you down. Right now is a time, and it's the reason we keep our buying power in check. It's the reason we keep so much dry powder for when you have huge down moves like this. I mean, it's not a crash or anything like that. It's just an adjustment. But when you have these big pullbacks, whether it be 5, 10, 20%, I mean, things like Apple, all your Mag 7s, some of them really got hit this week. But when you have the dry powder and you have a huge drawdown, that's the time to enter into, if you want to buy some stocks on a short sell, keep it for a month or two and then get rid of it. It's a perfect time to get into your puts whenever it's way down there at the bottom. But if you don't have any dry powder, you've just missed the opportunity. You've left money on the table. So it's vital to keep your whole portfolio in check. Keep that beta weighted delta in check. Keep that buying power very much in check. Keep dry powder on the sideline so that you can get into plays when the time is right. You don't have to constantly be making plays when plays aren't there. You can sit on your hands. Trust me, there's a time coming, like this week, that you're going to have great opportunity to get in and really get at it. So wonderful, wonderful. Keep your chin up. Don't worry too much about it. It's going to be okay. If you got caught with puts, hey, then here comes the call strategy on the next week's roll. If you're underwater right now, if you're in the money on your puts and you're more than 21, 18, 21 days out, just set tight. Hold on for a second. If you're inside that 2-week window, definitely look to roll those puts up. Do you need to roll them out and up? You can roll them out until the second coming almost. I mean, roll them out a month, 6 months, 1 year. Just keep rolling, 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 and sooner or later you'll get it. But understand, when you start rolling, they're going to hold that against you. They're going to hold that against you. It's no longer as easy to get out of your trades. But that's a story for another time. Just understand that it's going to be hard to get out of your trade when you roll. So don't go crazy rolling it into the future. Roll it into somewhere where you think you got a chance for that to get back up above, expire worthless, collect all the money. So it's just it's a delicate balance, and one you just have to learn. And you're learning it, we're learning it, and all along our way to learn everything that we can in order to retire early, in order to have this early retirement. And we've chosen the stock market to do that. I mean, we're not financial advisors, and this isn't financial advice. We're just talking about our hand. We're talking about stock strategies, and hey, we're all in the same boat. There's a bunch of us in this hemorrhaging market right now, and our portfolios need some help. So it's good to have, maybe a voice that triggers something in your mind, remind you, oh, I can do that, I can do this, oh, I forgot about that stock. Yeah, or just maybe an uplifting, hey, somebody, misery loves company. It's nice to know that there's other people out there doing, having the same struggles that you are, and maybe see what they're doing as well. What I'm doing, I'm rolling puts if I have to. I'm putting new strategies on next week because everything's so low. I'm laying low for today, the rest of the day, but that's okay. It's fine. Let's just watch the market and see what happens. We can shed a tear, we can have a bourbon at the end of the day to see what happens, but let's just see what goes on before we make any rash judgments. And as I promised, as I promised in the last video, we would start talking about the things of the AI data infrastructure build out. So we're going to start with energy, a little bit of energy today. So let me give you a few plays. Let me give you some ideas, and let's go talk about that right now. It's no secret or over exaggeration to say that these data AI center buildouts are going to be huge. I've said it and said it and said it. They're going to be huge and create a lot of opportunity for us to create some good money, to get some good, I mean, even wealth. It depends on how you play these. And again, don't play on, you don't have to be in on everything. And everything right now, speculative ish. So look at the stocks that we're talking about. See if there's an opportunity. And we're going to start with some big dollar stocks so that maybe for those of you who want to invest in the company over the long haul for a longer term investment, more so than a swing trade or an options account, let's see what we can do on those. And the first one is the biggest player, I think, really, or the main player, and it's Constellation Energy. Constellation Energy is really at the forefront of all of this. They already have nuclear power in operation. They're already powering homes. They're already doing everything. It's not speculative. They don't need to do things. They're ready to go. So that kind of puts them in the driver's seat. If you're ready to go with this nuclear energy and you're building reactors, you can do all these things because it used to be, you think of 3 Mile Island pictures that you've seen in history books and all these things of nuclear plants, just huge, like a big plant of any other nature, humongous. But now you can almost fit the size of what that power was generated from that plant onto the back of a flatbed truck and haul it and have a parking lot of these small nuclear reactors that really can outpower any big factory. It's just a progress. They've harnessed the power over time, and now they've got it down into just a nice little thing that doesn't require so much. So these data centers will require power, but we don't have to build huge factories. Now these companies can build these small reactors that, like I say, can be just hauled there, set in, and about the size of a parking lot, can really generate like a massive amount of power. And Constellation Energy is at the front. Now, Talon Energy, it sells the nuclear energy, but it can directly deliver it right into the data center. It can deliver it to the data center, which is a very nice thing for it to be able to do. Talon Energy also is a little bit pricier stock. You're looking at what we got here on top, $400. It's probably it's up there, but you don't have to buy a share. If you've only got $10, $10 is $10. $10 is going to go up the same way $5,000 would. It's all going to go up whatever percentage Talon goes up. Constellation Energy running at about $260. Just keep an eye on them, especially right now. If you're liking those, if you've been watching those or you heard about them, maybe you're already in them. It's a great time to get more into them because they have such a good pullback. Who else we got? Nextera. Nextera Energy is very interesting to me because they are making some huge moves. They just bought out Dominion Hope, which is key because Dominion was over top of Virginia. And Virginia has a huge data center alley, they call it. It's one of the main hubs. So now they've bought Dominion. They've got the ability. They're getting into the play of the nuclear sector and the energy sector. So there's a lot of good love right there that easily could happen. We've got them coming in at $88, a much better deal for, a little bit cheaper if you like the cheaper price on a stock, especially if you're running options. But they've also got deals with Meta and Google already in play, and they've already been talking with Exxon. So they are really getting steeped in there. So I'd watch Nextera and GE Vernova. GE Vernova is no new company to anything. It has been around for years as GE, as a spinoff of GE, and their ability is they can provide the power now. While this nuclear things are being built, whether you need the energy or whatever the case, of it, you can get your energy non-nuclear from GE Vernova through their gas turbines. And of course, that's not going to be for everybody, but it can carry you through till you get your energy. So they're going to be a good short-term player, I think. I think when the data centers really pop, you're going to see GE Vernova in there, and they've got a lot of stuff outside of that. They're in the space era, and they've got a lot of irons in the fire. But being able to provide power while the power is being worked on is a key element. I think that's a good angle to look into. We've also talked about Enphase. Enphase is a much more speculative play. It deals more with solar, but I think there might be something there. We talked about how they're riding at that $50, $55 range, which I'm not comfortable with. They either need to get it in gear and pick it up to over 60, or they need to settle back down where they like to be at 35. So just keep watching. It's dropped a little bit down from that 50, 55 down into the 45-ish range. So just keep an eye on that, as we should keep an eye on all these. And one of my favorites, I don't know, maybe I have a soft spot for it, but Oklo is a very interesting stock for me. It is now, as I've talked about, in that $50 range. I love Oklo at this range. It has dropped back down out of that 60 plus range. So $50 Oklo range is a great range for that. I mean, it is a great price if you want to own a stock. It is a great price if you want to use options on that stock. And I think it is going to have a lot of future in the nuclear energy realm. So there's just a few plays for you right there. And I mean, it hadn't even scratched the surface. We haven't even put a couple drops in the bucket. But keep those in mind. Just start looking at them and get your mind rolling over to that data AI center build out. We already know the chip makers. We already know Taiwan Semiconductors and AMD and NVIDIA and all these. We already know the main hyperscalers, the people with the bucks behind the move, with is your Meta, your Googles, and all of these type people. So we'll talk about them a little bit, but we're really focused in on all the things right underneath them, the power, who's building these things, who's cooling these things, who's mining the rare earth materials needed to make the chips. So we'll get into it, but keep those power energy plays in mind. Start looking at it, put them on your watch list, see what happens. And me, I like to just maybe get in and buy a part of a share, so it's right there in my ticker symbols, so I can really watch it and keep it in there. But hey, and keep those plays in check, keep your buying power in check, and keep your delta portfolio, delta, beta weighted delta in check. It's going to be okay. There are better days ahead. So thanks for tuning in. Thanks for being with me. Like and subscribe if you want. And hey, we'll see you next time here on Trading in Your Future.